Welcome to the Lawyers Weekly Show for an in-depth look at the issues facing the legal profession.
Hello and welcome to a special episode of the Lawyers Weekly Show, produced in partnership with our friends at Distinctive Finance. My name's Jerome Doraisamy and I'm coming to you today from Camaragal Land in Sydney. I'm very pleased to be joined for this conversation in the studio by the two directors and co-founders of Distinctive Finance. First of all, we have Christian Goodall. Hello, Christian.
Hi, Jerome. How are you?
Very well, thank you. And we also have Mitchell Lobb. Mitch, hi.
Hi, Jerome.
Now, today we are going to be discussing where interest rates are at, the correlation between those rates and property prices, and what it all means for lawyers on the ground as you're looking to build up your property and investment portfolios and just get ahead with your financial security as you continue on in your careers. Gents, there's so much for us to discuss here today, but before we get into all of it, for those who perhaps haven't heard of Distinctive Finance, would you mind giving us a bit of an overview for who you guys are and what you do?
Yeah, sure. Thanks, Jerome. So Distinctive Finance, we started as a brokerage back in 2016. We've been operating as brokerage would be since then, and just last year in November, we decided to set up a complete division which was focused on the legal profession because we believe that there's a great opportunity to work with legal professionals, and it was a bit undone in relation to brokerages. But prior to that, all of us that are in Distinctive Finance, we've all come out of the major banks. We've all had time in, whether it be with NAB, CBA, Westpac, etc. We've all worked at a private bank, and we've had our careers there for well over 15 years each. And we've tried to adopt the private banking methodology inside our brokerage.
Yeah. And Mitch, why is this line of work so meaningful for the two of you, and why is supporting lawyers such an important part of that?
In terms of meaning, it all comes down to help. I love helping people, and the ability to do that in the finance world is obviously because that's what I've done. I grew up in banking, and we saw a need obviously to look after legal professionals because we have done that in the past with our private banking backgrounds. And so we understand the market, understand legal professionals, and we thought we could bring that private banking type ethos to legal professionals, relationship banking, trusted advisors, that sort of thing.
Yeah. So, gents, let's talk about the current economic climate and what it all means for lawyers. And as a starting point, I wanted to get your sense of why this is an important conversation for us to be having for the legal profession right now. What is happening out there in the market, or what are the current trends that we are seeing that make this a particularly pertinent conversation?
Yeah, no, it's we think that right at the moment is a time for professionals such as legal professionals to be absolutely ready to go. If you look today, the inflation numbers have come out. It's the lowest it's ever been since 2021. And we're on the doorstep of a RBA decision on the 19th, 20th of May when they meet again. Everyone's tipping at least 0.25, maybe even close to 50 basis points, which will be, that will absolutely stimulate things inside the property market. So we really believe that if you're a professional at the moment, you should be ready to go to take advantage of when those things start to move inside the marketplace.
Yeah, and Mitch, we were just talking off air before we came in to do this recording that there are some new inflation numbers out as well.
Yeah, so the trim mean inflation that Christian was referring to, the RBA's preferred metrics, is dropped to 2.9%. So I think based on that, the market is pricing in 100% chance of a cut in May, or in a few weeks, as we speak. But even some banks, that are predicting 50 basis points. Now, what that means for the market, I was talking to Christian earlier about, what that would do. I think at the moment, consumer confidence was obviously down with all those rate rises prior to where we are now, and the property market was remaining relatively flat, or even decreasing in certain areas. So 25% will be obviously good reprieve for clients and borrowers, but also if it's higher, that it could hopefully stimulate the economy. I think, and again, we were talking earlier about other factors. This on top of an election as well. I think will bring that confidence back to the market. But on top of this cut, there's still banks are still predicting further cuts to come throughout the year.
Yeah, well, let's talk a bit more about that. So, as a mortgage holder myself, I'm certainly very pleased to see rates coming down, and today's inflation numbers offer me a bit more hope that my interest rate will keep coming down. So,
Yep.
are we able to make any educated guesses beyond the May meeting of the Reserve Bank as to where rates might be headed for the rest of the year?
Yeah, well, markets are predicting another fall up until December. Now, they meet every 6 weeks, the RBA, so things could change, but based on current markets and especially, again, what's happening with the upcoming election, then Donald Trump and his tariffs in the States, things could change. But at the moment, as they sit, they are predicting a further 4 rate cuts as well.
Oh, sorry, were you about to add something or no? Okay. Yeah, you mentioned Trump there, Mitch, and I mean, look, I'm not an economist, certainly, by any stretch of the imagination. I can barely spell it. But I've certainly seen or heard observations that the uncertainty and volatility that we're seeing in the market as a result of this trade war and the tariffs coming on and off, will require the Reserve Bank to try to offer a bit of a reprieve, for mortgage holders and for Australians just more generally, so that we can keep the economy, keep the train on the tracks and keep everything stimulated. So, is that another factor into why we might see rates continue to come down?
Yeah, absolutely. I think what you'll find is that'll, as Mitchell's mentioned, with rates coming down, consumer confidence will improve. And typically, if you look back over Australia's history, when rates go down, property prices tend to improve and increase, and that will then have a knock-on effect. It'll bring investors back into the market, in particular in New South Wales and Queensland. Victoria's got its challenges for investors, but you'll certainly see consumer confidence improve. With rates coming down, borrowing capacity increases for individuals. And if you're not going to look to borrow and you're an existing mortgage holder like yourself, Jerome, your repayments should hopefully come down. Or if you can afford it, we'd always recommend that you keep your repayments at the higher amount so you can actually clear your mortgage as quickly as you possibly can and save some interest along the way.
Yeah, well, certainly it's good to have more options open and available to oneself. But you mentioned property prices there, and it might be good to expand a bit further on that correlation between interest rates and property prices. For those of us, including myself, who maybe don't fully understand that correlation.
Yeah, sure. So when property prices, so if we look at interest rates coming down, what that will do is it will allow people to have further capacity to go and borrow more money, which then stimulates the market. So right at the moment as a business, we've got significant clients that are already pre-approved looking to get into the market. The thing that's probably been holding them back is a little bit of confidence, where a rate's going to go, what's going to happen. So I think we're in a bit of a moment of, when we look at things right at the moment around, inflation today, RBA interest rate announcement, election. Once we get through some of that stuff, it'll provide some stability inside the economy, and then we'll start to see things move. When people come back into the market and they start to buy property, that naturally has a knock-on effect, creates demand, supply, and then we should probably see property prices start to increase again.
Yeah, fantastic. So let's talk about lawyers then, and perhaps a starting point here might be to reflect on perhaps the unique position that lawyers may find themselves in, relative to other borrowers out there, through things such as LVR. But from your perspective, gents, how should lawyers be viewing the market right now and where they sit?
Yeah, so our experience with legal professionals, especially, is they're time poor, and so what they should be doing, especially now that tax time is been and gone or coming in the future tax. Sorry, let me start again. With tax time coming up, having their financials in order to then be able to pull the trigger on purchasing a property, renovating, upgrading from the existing residence, very important. So things they should be considering is obviously having tax up to date, very important. We have that conversation a lot, and it's good that these days with tools available to legal professionals. That's getting better and better in terms of keeping tax up to date. Having your tax returns done and completed. They're due. 2024s are due now anyway. So having those done with your accountant, very important. And that's where I guess having a trusted advisor is also important. Is we can take some of that time back off legal professionals, working with their trusted group of people, whether it's accountants, associates, that sort of thing, and liaising with them. So again, putting time back into their diaries, we can do all that stuff in the background.
Yeah. And sorry, were you?
Yeah, I was just going to add to that. So Mitchell's right. So time's a critical factor for professional people, and we often say to our clients, if they do their homework up front and provide us with the information that we require, then we go away and do our work and we take all that burden off them. And look, lawyers are in a unique position. They're a highly desirable client. They're a highly desirable client to all of the banks. And because of that and because of their capacity to generate income, they are allowed to, obviously borrow at a higher threshold. So you will have heard in the past that lawyers can borrow 90% of the property price with no lender's mortgage insurance involved, which is one of the unique things that they've got access to. So, they should be reaching out to their trusted advisors, in particular their debt advisory partners, which in our case, Distinctive Finance, and come to us and talk to us about how we can actually assist them along their journey of purchasing properties and upgrading.
Yeah. And what else should lawyers be doing at this point in time to, I guess, prepare themselves to have, the best possible loan application? Are there certain questions that legal professionals can be asking of themselves in order to, think of the best pathway forward?
Yeah, certainly. It depends on what they where they're practicing in law. But if they're a barrister, for example, as Mitchell just mentioned, they should have already lodged their 23-24 returns. And by now, we've had 3 quarters just about to roll through for the 24-25 year. So they should have an interim profit and loss prepared, supported by 3 BAS statements. And if that run rate is significantly better than last year, the relationships that we've built up with some of our lenders will allow us to look at some of that income in isolation and give them more capacity. So being prepared in relation to your financials, profit and loss, BAS statements, ensuring your tax is up to date, they're the critical things. Outside of that, just make sure that I don't know where I was going.
Well, so other things they could look at is limit creep, what I like to call limit creep on credit cards.
Yep.
And the pesky little one called the buy now, pay laters type of facilities, which can not derail applications, but if you signed up for too many things, it just becomes a little bit trickier when you're trying to lodge. So tightening up stuff limits if you think you've got excess limits on credit cards, how many buy now, pay laters you've signed up for, those sorts of things. So keeping that, just reviewing it, or as Christian said earlier, letting us do that work for you preliminary, and picking those sorts of things up, because again, using a trusted debt advisor such as ourselves, we want to put you in the best light, the legal professional in the best light with the lenders. And so having those conversations with us, preparing your story, your application, before it even gets to the lender is very important. So stuff like, we used to look in the past in terms of the 5 C's of credit. You look at the character of the person, the history of repayments, all that sort of stuff. And so having those conversations with us up front is very important, so we can guide those stories with the lenders.
And outside of having someone who can help you manage these processes, particularly if you're a time-poor practitioner, what might be some of the other benefits of having an experienced debt advisor?
Yeah, look, without a doubt, it's there's certainly levels to the game, we'd say. And the way that we would do things, if it's a transaction and it doesn't fit with inside the box, we often go to the potential lenders that are on our panel, and we would workshop that transaction to ensure that the appetite is where it needs to be prior to actually lodging.
Yeah.
And that's very important, because if you've got a broker who's just lodging applications in, they're putting hits on your credit report, which then impacts your credit score and actually impacts on your capacity to borrow. So having access to people that have got trusted relationships with inside the banks, such as ourselves, because we've been around for quite a while, we get access to the credit teams, and we can have discussions and ensure that when we actually do submit the application, it's quite a smooth process.
Yeah. And so, for the lawyers themselves, I mean, you're obviously having conversations with practitioners on the ground, and Christian, you mentioned a bit earlier that you've got a number of clients who are ready to go with their pre-approval, but sort of broadly speaking, when you look out across the market and based on the conversations you're having, do you think that lawyers in general are ready to go right now, or are they perhaps falling a bit behind in terms of getting the house in order, metaphorically speaking, of course, so that they can enter the market or expand their portfolios?
Yeah, I'd have to say, I think unfortunately for them, because they're so busy with inside their profession, their personal matters get pushed to the back seat. So that's where we talked before around, if they do their homework up front and provide us with the information, we can do all the heavy lifting and take that burden away from them and actually get them into the position where they can go to the market. They can be pre-approved. They can turn up to auctions, open homes, and bid with confidence, knowing that they can get some things done.
Yeah, and Mitchell, for those lawyers, if they are sort of letting this slip, from the top of the to-do list, what might be some of the, I guess, the consequences for them, I guess on a personal or financial level?
Yeah, absolutely. Well, financially, you could be missing out on good rates. Part of our service is provide periodic reviews around your financial situation to make sure that the deal that you're getting or the rates that you're on are the best in the market. So that's important. Sorry, what was I going with that? Financially,
and personally,
yeah,
what might-
personally. Look, I think using specialists in the market, not just for finance, but anything. When you go to the doctor, you don't self-diagnose. You go to the doctor to get diagnosis if it's something medically related. So, especially from a personal perspective, it's not your area of expertise. I think reaching out to a specialist, again, as Christian, we've all talked about, just gives you a bit more peace of mind that it can be solved, and that there's someone there to help you along the way.
Yeah. And in your experience, do you think that lawyers are good at delegating such matters in these ways, or are they so used to being the expert in the room that they think that they can handle it themselves?
No, they're very transactional. So I don't think they can handle it themselves. They're open to help, but they're very transactional. So when something's on the go and the transaction needs to be done, they'll drop everything and focus on it, and then you get their full attention. But let's just say they were going to an auction and they needed a pre-approval. They went to that auction and they missed that particular property, and there were some other things that we needed to follow up on. Once that particular property's gone, they'll let it slide again. So I'm often called the friendly pest. I absolutely stay on top of things and call. And one thing that we offer is too, as a brokerage, we because we understand the profession, how it works. If they're called into cases and hearings and things, and we'll meet before, after hours. We'll meet on weekends. We've actually done that quite regularly, which gives us a bit of an advantage in the marketplace as well.
Yeah, sounds like the friendly pest needs to be on a business card for you,
Yeah.
Christian.
Happy to be.
So, what would be your advice to lawyers listening to this who are time poor and they want to get into the market, they want to get their ducks in a row, but it's just too many things on top of each other. The to-do list is a mile long, and the idea of getting started on this journey just seems like a little bit too much right now. What would you say to those lawyers?
Yeah, look, reach out to us. We've got a checklist of everything that we need to tick off for you. If you can introduce us to your, as Mitchell said before, your trusted partners, whether it be your accountant, etc., we can actually liaise with them and take a lot of that away from you. It's just, if you can put in a half an hour to 45 minutes of your time in helping us collate some information, we can do the rest of it for you.
Yeah, and the important thing is, don't be daunted by it, because we're here to do the heavy lifting. Take the weight off your shoulders. And I think if you do that little bit of homework, we then create that story, as I said, for the lenders, and the path forward for you from a financial perspective. So let us do the heavy lifting, and just give us a little bit of information, and we can run with it.
Yeah. And gents, what excites you both about what's on the horizon for lawyers as they continue on their financial journeys? What do you see as being the headline opportunities for practitioners if they do get their ducks in a row and look to move forward in these ways?
Yeah, look, they can, as we mentioned before, they can take advantage of the things that are available to them as a professional, high LVR type borrowings, If they get their shop in order and we get them access to collateral, we always say if you can have some powder ready to go for particular opportunities. We've dealt with some barristers recently where they've been trying to purchase rooms, they've missed out. However, they're very, again, transactional focused. So we've said to them, listen, keep the powder ready to go and a room will pop up. So working with them really for us is the pleasing and rewarding part.
Yeah.
Actually seeing them move on their journey, whether it be from, reading on a floor, getting into their first, room, it might even be a half room, and then moving up to becoming a senior counsel and things like that, and or whether it's with inside a firm as they progress through the partnership. So we love to help people along their professional journey in that space.
Yeah.
I couldn't say it any better. We just love helping them, as you say, on their journey. Their trajectory is what we really get excited about, and then being obviously a trusted partner along the way, and then generational. Seeing the relationship move from one generation to another. We've been in it a long time, not too long. We're not that old, but that's what we love. Yeah.
And Mitch, for those who are listening to this episode and want to learn more about Distinctive Finance, how can they do so?
Please reach out to us. Website,
Yeah.
I guess.
Yeah.
Website is distinctivefinance.com.au. Reach out to Christian and myself, and we'll be happy to help. Let us do that heavy lifting for you.
Mitchell Lobb, thank you so much for your time.
Thank you, Jerome.
And Christian Goodall, thank you.
Thank you, Jerome.
It's been fun. I'm sorry.
No, absolutely. No, this has been fun. Thank you to the listener for tuning in. We hope you enjoyed this episode. And thank you to Distinctive Finance for its support of Lawyers Weekly. We'll see you again next time.